The following is a technical analysis on General Motors, a company of the consumer cyclical sector in auto manufacturers here off the daily realm. I believe that one of the more imperative strategies to trading is to immerse myself within my own perspectives, theories, and or opinions as I analyze a trade setup, disregarding the mainstream and aligning with the herd and the human sentiment. And with what wouldn't be a popular opinion, I believe that the UAW Union Auto Worker strike looming over all three major auto companies, an unprecedented event. I wanted to make it clear that I believe that this is a deliberate dismantling of one of America's foundational industries. And it seems to me that the union leaders are acting as puppets for globalist agendas, working closely with the CEOs of these BlackRock-owned companies associated with the World Economic Forum, where these union bosses have been using persuasive tactics, appealing to their members. They've been pounding the drum about how great the workers are and how unfair their contracts are compared to others. Even though these jobs are some of the best paying and most luxurious in what's left of America, sadly, these enchanting tunes seem to blind many to the reality that they might actually be receiving fair compensation. The Dark Triad understands human psychology well and is skillfully using it as a weapon to dismantle everything. The idea of a 32-hour work week at $40 an hour pay is an absurd red flag, signaling that subtly is no longer their strategy. It appears that they are now shifting their operations to Mexico, and here lies what I believe to be a near-term potential bearish transitioning point that we've seen really of the all major pivot inflection transitioning points throughout the entire year. Starting off here where we had a well-defined, hidden, concealed negative divergence amongst dual indicators in the oscillator histogram, and I believe we've reached a major key inflection point with a vast majority volume at price profile right around this $30 to $40 range. I have added a primary reactionary downtrend line, very steep reactionary primary downtrend line off the July reactionary highs, and I believe we are at the beginning stages of a potential bear flag bearish continuation pattern with a perfectly aligned measured bear flag pull down to the 28.46 price support, with the 50 exponential moving average hovering in down below, completely crossing over with an already rarity 200-day moving average, which you would call a death cross bearish continuation pattern in the moving averages, aside from the 200-day moving average interflecting exponential moving averages, which can sometimes be a rarity before the actual 50-day moving average intertwines on a death cross bearish continuation pattern in the early stages. Whereas you have the price percent oscillator in a bullish cross setup, confirmed crossover, honing in onto their zero line threshold. And I believe, again, that will be an additional key inflection point if on Monday we end up having a beautiful open right out the gate on Monday, powering a nice clean opening day rally right into this primary reactionary price resistance, offering an additional objective short trade entry, if not an existing short position. Whereas I believe the risk reward ratio lies heavily on a move to the downside, whereas bull traders, long traders, they want to see a breakout above solid daily candle close, breakout above this key inflection point correlated with the 50 exponential moving average, completely taking out that level on a solid daily candle close in an issuance of a potential major move right back up to retest its 50 and 200-day moving averages, averting with what would have became a bear flag continuation pattern, ultimately taking out that flag and dismantling the pattern in an all-out. Bear traders, short sellers, they want to see a potential retest, which is another 1.5–2% move to the upside, maybe even potentially being rejected amongst the 50 exponential moving average on a false breakout momentum fueled overshoot, right back down to the 32.09 price support correlated with the primary reactionary uptrend line there for a 7.3% crash, down to 30.80 price support for an 11.2% crash, double-digit move, and then ultimately all the way gearing back down to the 28.46 on a complete reaction of the bear flag pull for a 15 to close to 20% crash off the top of that primary reactionary downtrend line. And that would be an additional 18% crash, where the first initial flag pull pattern has a perfect measurement of an 18% crash additionally, with major price support level right off the July reactionary lows, just a continuous amount of reaction right across that sphere. And that will be the most imperative juncture for GM and General Motors major price transitioning zone of the entire year, taking you out to the much larger picture off the monthly interval. And as I like to say, the longer term and bigger picture intervals usually outmaneuver and outweigh the more nearer term time frame and intervals. And here we are at a major inflection point right off the 50 monthly moving average, where we have been rejected impulsively 3 times in a row, sitting on a shelf of consolidation of support. And with what comes with consolidation is comes with a vast amount of energy in either direction for that prolonged break on a massive charge of beta. Whereas we additionally have the price percent oscillator already cracked, already broken down below its zero line thresholds with nothing but red candle prints below the oscillator histogram. So we do have technical momentum indicators on the much larger picture inflicted with damage. But really, with what was so significant upon studying the charts here are what we have are two well-defined bearish continuation patterns here within the monthly interval, starting off a 3 black crow bearish continuation pattern, followed with, I believe, one of the more well-defined evening doji star bearish continuations pattern, followed with a large green candle close up above, an indecisive evening doji star setup, and then a fast, violent rejection amongst this monthly interval. And that is, again, one of the more well-defined evening doji star setups that I've seen in quite some time, only increasing the odds for a much larger drop.